20146, your SMS line at Metropol TVKE across all your social media platforms. Let's talk your official sector trends this morning. Now, the World Bank indicated that taxation played a key role in the Kenyan economy, contributing an average of 16% of GDP between 2014 and 2016, making it a standout performer in East Africa. Analysts maintain that while raising tax revenue should be a key focus for government, developments around that tax environment are significant as well. Now, Kenya's tax environment has undergone several changes in recent years, including the introduction of the online filing of tax returns and electronic payment of taxes due. Now, joining us this morning to help us get tips for individuals and businesses in this ever-changing tax environment is CPA Jeremy Ragunya, who is the lead consultant at Prolific Accountants. Jeremy, yes. Good morning, sir.
Good morning.
Welcome to Metropol Television.
Thank you.
Somebody want to ask you this question, that Kenya's tax environment has seen a lot of revisions. Does this speak to the robustness in the tax environment or a weakness in that tax environment?
Yes. So, like you rightly point out,
yes,
you have had a lot of revisions in the taxation.
Yes.
And I wouldn't say this points to the robustness of the environment, maybe the opposite.
Yes.
Because if you think, for example, of say like last year, for example, we had presumptive tax,
yes,
which was introduced. And even before it could celebrate its first birthday, it was already taken away.
Yes.
Then again last year we had all these tax relief measures which came with they were supposed to be COVID relief measures.
Yes.
But then towards the end of the year, again they are already taken away. So it doesn't look like a robustness of the environment.
Yes.
Yeah.
But when the other side of the coin could be true, that for a moving economy, that you have to keep on looking at your tax law and keep on changing it to fit what might be developing at that exact time. Would somebody have that similar argument?
well, you could argue that, say, for example, if you were thinking of, say, like the digital services tax,
yes,
that there is a lot that has been happening in the digital space.
Yes.
I mean, Kenyans are known. Someone was saying that never mess with Kenyans on Twitter, for example. Kenyans are known for being very digital.
Yes.
So in that sense, you could argue that way. But the larger picture really is that it's as if the taxman is still trying to find out what works.
Yes.
And puts forward this measure, and then they find it has not worked and has to change it.
Just before we get out of that question for how complex it is for us to understand our tax laws in the country.
Yes.
How difficult is it for an economy that is growing like our country now to administer tax to a bigger population? Okay. Is it the smaller the population, the easier it becomes for you to administer tax, or the bigger it is, the complex it gets?
Okay, well, according to IMF, for example,
yes,
the issue of administering tax has little to do with the size of the population. It mostly seems as if it has to do with how developed the country is. So, for example, you say that more developed countries are able to tax even say up to 40% of their population, as we are talking of only about 15%
yes,
of the population being under the tax bracket. So maybe it's not so much the size of the population as how well developed you are.
Yes. Pretty much. Since we're in it now, let's then introduce what your conference is actually going to be. Your conference, which is going to happen next Tuesday, and we're going to give our audience details on exactly how you can attend it. It is Tax Tips in an Ever-Changing Environment. Yes. So when you look at exactly what the conference is going to be, why has it been important for you at Prolific Accountants to think that 2021 is the time that we actually need to introduce this topic for tax tips for an ever-changing environment? Why is this topic very interesting to you? All right,
thank you. So the conference actually, in fact, it is not exactly a conference. You could say it is a meeting. It is a meeting of our chapter.
Yes.
I'm part of of a group of business leaders.
Yes.
Where we meet together and we exchange business, or we refer business to each other.
Yes.
It's known as BNI Eagles. So the reason why we think that this is an important topic at this time is because, number one, of the tax changes that have been happening. A lot of tax changes happening from last year into this year, and also because, again, of the environment in which we find ourselves in, with the pandemic and businesses facing some hard times. Then this becomes an important topic to address at this point in time.
Yes.
Yeah.
If you look at where we are in 2021, do you find it hard for especially smaller businesses to actually understand how to navigate the tax environment in the country?
Yes. That is true. I think you find that with even say like our clients.
Yes.
You find that it is like a barrage. It's like a torrent of taxes all being introduced at the same time.
Yes.
So sometimes back it was easy. You just knew you have income tax and VAT. Now suddenly you have all these taxes, minimum tax, you have DST, that's the digital services tax. So, and then the rates are keeping on changing. So it can be tough for a small business.
Yes.
Yeah.
So, Jeremy,
yes.
Let's look at exactly why this meeting is again very important, because then you do not want most businesses or individuals to fall into that docket for non-compliant.
Yes.
And when we're talking about compliance, you would actually now look at KRA, who's the tax man. So when it comes to expanding that tax bracket, which is the best way out for KRA? Number one, we've seen exactly how they've taken. Is it, number one, administer more taxes for the area that is compliant, or just go into reforms, educate the masses on that tax, and make sure that there's this good relationship between KRA and the mass in terms of customer relations?
Yeah.
What normally works out?
Okay, yeah. So, number one, education is really important,
yes.
Like you're saying, and that is why as BNI Eagles we will be having these meetings so that we can be able to educate our members,
yes,
and also be able to educate also the general populace, anyone who is able to join.
Yes.
So education is really important, because also on the side of KRA you find that one of the challenges that they face, you can say, is a lack of goodwill and trust from the members.
Yes.
And KRA has been making attempts to achieve that, for example. So for example, just something subtle, you find they changed their Twitter handle from KRA, that is Kenya Revenue Authority, to KRA Care. Okay? So that that is trying to engage the citizenry,
yes,
so that you don't feel like this is an authority that is overbearing on you, but it is more of a partner, kind of partner. But you still find that maybe they've not achieved that to a large extent,
yes,
that goodwill and that trust. And maybe that also has to do with probably the way the citizenry feel the taxes are used after they've been collected.
Yes.
Yeah.
But still on that specific area, which direction do you think that KRA is pushing more toward? Is it administering more taxes, come up with little taxes here and there to make sure that the part of the economy that is compliant actually gets milked, or they are trying to expand it in the sense of get more people to pay more? Where are we in the country?
I think you put it very well. And unfortunately, what has happened is that the taxman continues to still tax more those who are already compliant.
Yes.
And instead of thinking, how can we actually expand these, how can we bring more people into the net, into the tax nets? And so, and that has an adverse effect because, for example, you can literally tax a business to its deathbed. That you are taxed, and these taxes are so much until you get to a place and you're like, by the way, this is not working, because it seems like I'm only working for tax. So at this point, continuing to tax more, the same. In fact, studies have shown that the more you increase taxes, it is like there's an optimal level at which if you tax the businesses, then you would collect a lot of taxes. But the more that you continue to increase Then number one, guys try more to be evasive.
Yes.
Guys do their best to come up with tax evasion measures. But the other thing is that it just becomes unsustainable. Let me give you an example. For example, if, for example, you say last year the income tax for individuals was that it had been brought down to 25%. Now it's been taken back to 30%.
Yes. Yes.
So if, for example, I'm a businessman and I'm considering hiring someone, then it means that if I'm going to be hiring this person, it means that now either I have to pay them more to cover for the taxes, or I have to think, do I really need at this point to hire this person? Or can I distribute the workload for the time being
Yes.
among the existing employees? And so you find if I do that, whatever tax the taxman would have collected, and that's a simplified case, but eventually that's what happens, that whatever taxes you would have collected if I had hired now in terms of pay as you earn, you fail to collect just because now you pushed the tax too high.
Yes.
Yes.
So let's talk about 2021, Jeremy. From where you're sitting this morning, what do businesses really need to understand, or what really do they need to understand when it comes to the tax environment in the country? There's this saying that 2021 was seen as a rebound year, but then it's not a rebound year, because when the second containment measures, this morning we're just talking about how hoteliers are crying for the government to reopen the economy so they can actually even get to save their jobs. So in a tax sense, what does a smaller business really need to understand?
Okay, so a small business, in this case, when you find yourself in this kind of environment,
yes,
number one is that you need to know that knowledge is power. You know that to be forewarned is to be forearmed.
Yes.
So if, for example, you don't understand, if you're at a place where you don't understand the new tax measures that have come up, then you find yourself exposed, say, to penalties which have become very punitive.
Yes.
But then even when it comes to understanding, for example, like when we have the digital services tax introduced, there was a lot of misconceptions around it. So someone will think that, for example, because I have a Facebook page where I get customers and they come and buy shoes from my shop, that I am subject to digital services tax, yes, which is not the case, yes, for example. So number one is that understanding is important, and which is why, again, as BNI Eagles, we are having this forum where we can be able to educate our members.
Yes.
And then the other thing is, I will say, which is very important for small businesses at this point in time, is do not walk alone, okay?
Isn't it? Do not walk alone.
Yes.
Jeremy, which, if you can allow me, because that's where the gist now begins.
Yes.
Do not walk alone, meaning that you have to get, I'll use the example now,
yes,
prolific accountants, to
yes,
actually walk with you throughout that journey.
Yes.
Where is this balance between being tax compliant with a minimal cost? Because a smaller business would like to think, if I can limit working with somebody on my side who's going to tell me exactly how tax compliant my business is going to be, then that's part of the cost that I have to cut in 2021. Are you saying that part of this cost that you can't cut off your business in 2021 is, for example, prolific accountants?
Okay, there's a saying. Yes. They say that, do you think that education is expensive? Try ignorance.
Yes.
So you will find that when we said not walk alone, number one, of course, we mean it's important to have a tax advisor.
Yes.
You will find that, as long as you have a good tax advisor, that they will actually be saving you more money than what you will be paying them. In any case, you would want it to be justified, okay? That you would want it to be that the costs of having this tax advisor is justified by the amount of money that they are saving. Let me give you an example.
Yes.
One of our clients is in the petroleum industry, and they were gearing up to start paying minimum tax, and we had to tell them, but you are exempted by virtue of being in an industry that is regulated, whose retail price is controlled by the government.
Yes.
So right there and then.
That's how complex it gets, isn't it?
Yes.
And Kerry is not going to refund you at the end of the day.
No,
they're going to celebrate.
Yeah, they're going to celebrate. Yeah. So the other thing, of course, when we say don't walk alone, is belong to a group or a network of other businesses.
Yes.
Case in point, minimum tax has been halted. Okay, but well, it was suspended. It is, and that's important to know that
yes,
it was suspended. It's not that it has been scrapped. But if you think about it, how was it suspended? It was not just individual taxpayers who had that impact. It was actually, you know, you say Isinya Bus Association, you have Kenya Association of Manufacturers,
yes.
You have Red Track.
Yes.
All these are businesses that have come together. These are businesses that have come together, that are networking, that have realized this environment, I can't walk alone. You get what I'm saying?
Yes.
And that is why I'm saying that for a small business in this particular season, you shouldn't walk alone. Just find, if you allow me to use this example, if you're a fan of Game of Thrones, we used to say that, or they used to say that the lone wolf dies, but the pack survives. You understand? That if you're a lone wolf, then you find that you're going to be exposed to danger, you're likely to die as a lone wolf.
Yes.
You're likely to survive as a pack. So find your pack, okay? For me, my pack is BNI Eagles, for example. So find your pack, and now join up with your pack, and that way you can be able to survive in these environments.
Pretty much. This is the direct question that I got from the audience that I really need to ask you, because we're running out of time this morning. Employee classification for a smaller business. How important is it for you as a smaller business in 2021, especially when now you're struggling with taxes here and there, with the reduced bottom lines, for you to properly classify somebody as a contractor and as an employee?
Okay.
And is that a gateway? Can you classify all your employees as contractors so you don't get to pay?
Yeah, okay. That is, let me say, that is an area that the taxman likes a lot.
Yes.
Because Kenyans, with our ingenuity, we will find that we will want to do that. We will want to classify all our employees as contractors.
As opposed to permanent employees.
Yeah, permanent employees.
Yes.
And therefore, of course, pay less tax. And so what the taxman, we call it case law.
Yes.
What we have observed with the taxman is that they came up with a criteria for determining, is this person an employee or a contractor? We call it the MICE test. MICE, that is M-I-C-E.
Yes.
So M is mutuality of obligation. I is integration. How integrated is this person into your business? Then the control. What amount of control do you have over this person? Importantly, can they be able, for example, to invoice other people for the same kind of service that they are providing to you? So that is so the taxman will look at that, and there are cases where, for example, a company has treated an employee as a contractor, and the KRA has gone to court, and they have been able to prove, and they'll just say simple things like this person had an office at your premises, they were reporting 8 to 5, maybe you call them human resource manager. So, but then again, you see, these are also things that a tax advisor is able to help you iron out. That if you call this person a human resource manager, there is no way the taxman is going to look at them as a contractor. So it's an area to watch, but it's also something to consider if it can work. And that's where you say, ask your accountant.
Pretty much. Yeah. All right. Now, top tip, if you have any, for individuals under the tax environment in 2021, what would it be?
Okay, so for individuals, you need to consider, number one, are you an employee or are you self-employed?
Yes. Because
if you're an employee, then you will say that the tax benefits or the tax considerations are limited.
Yes.
Because you're going to be taxed at source. But then there are still things you can do. For example, if you have like life insurance, if you have a life cover, you find that you can be able to, if you take a mortgage, if you are contributing to a registered pension scheme, all of those are allowed. You get reliefs for each of those, which actually means you end up paying less tax, and you're also building your life, you see, as an individual, because you contributed to a registered pension scheme, or to a home ownership savings plan, or or you took a mortgage, or you have life insurance. So each of those, they actually give you a relief. So if you're employed, that would be the case. If you're self-employed, then just think as a businessman. All the things that we've said above there about a company, do not work alone, knowledge is power, then those they also apply now to you as an individual, self-employed individual.
Yes, pretty much, isn't it? All right, let them talk about the meeting that you're going to have. Can I attend as an outsider just to listen in on exactly what it is you're talking about?
Yes. You can be able to attend. You just need to write to hosts@bnieagles.com.
Let's BNI, that's BNI as it is.
Yes,
and then Eagles.
Yeah, and
yes,
then Eagles. Yeah.
Yes.
Yeah, so that is hosts@bnieagles.com. And then you'll be able to attend and to listen in and see what we are doing as our pack.
Pretty much.
Yes.
Finally, this is a question that I have to ask you. Yes, we know the case is still in court. We're not going to talk about that case. But what are your 2 cents on minimum tax?
Okay, this is my opinion, and it is a bit punitive when you think about it. Especially, maybe the service industry may not feel it as much. But for example, when you talk of someone who has to buy and sell, if for example you're in retail, and maybe that's why you have red track coming in there, then it assumes that you have a very high profit margin for you to be able to pay 1% minimum tax. So probably what the taxman needs to consider is like what Nigeria have done, which is to have the minimum tax, but have a very low, like a lower rate, a much lower rate. So you had like Nigeria reducing their rate from 0.5 to 0.25. So maybe that is something that will be manageable. Because the other thing that they were saying about minimum tax is at times when you have reported losses, it is because the taxman in the first place allowed you to have some deductions. You know, like say you're in manufacturing, and that can explain why Kenya Association of Manufacturers is there. You've been getting what is called a 100% investment deduction on machinery. So for example, if you set up a factory, you get 100% tax deduction. So you report a loss because the taxman allowed you a tax deduction. Now you report a loss, then they say they are taxing you. So it's like they are giving with one hand and taking away with the other hand. So maybe they could consider a lower rate. That could probably work.
Pretty much. CPA Jeremy Rugunya, thank you very much for visiting Metropol Television this morning. And I hope you do know exactly how to register for that event. It's happening Tuesday. Just right again, finally.
It is host@bnieagles.com.
Pretty much. Register. Get to get the top tips from the accountants. And what I take away from him this morning is never walk alone. You should never. All right. We take a short break. Once we come back, top economic events happening in this country this morning. Top on that, our trade deficit. It is at the worst it's ever been this year. Once we come back.